Well, we fucked around and we found out today. I was actually up I think I was like $500, $1,000 in these funded accounts earlier. And then FOMC happened. I was trading the combines. So trading the evaluation, the combines during the actual FOMC, the action. And then I got a little cocky because I was like, oh, look, I'm killing it in these combines right now. Like, no problem. I'm just killing it, right? So I was like, well, I'll put a couple more trades on the express funded. I'll get in there and put a couple more trades on it. Let's try it out, right? Let's get crazy. But instead, the market was just very volatile. And it was funny because I actually got into a trade. The market kind of took me out, and then ended up going higher from there. So, it is just part of the process here. If let me see, NASDAQ, we had the FOMC this morning. FOMC comes out and we're like, all right, what are we doing here? What are we looking at? So we're looking at the FOMC deal. And, at this point, like I'll show you one of these little trades. So I took this little trade right here kind of for this little, just push back up, right? So from the 30s up into the 40s, kind of saw that idea of kind of pushing back up, and it just kind of worked out, when there was volatility there. So we traded that and kind of got some scalps here and there on the combines, and then we ended up going back into the funded account and fucking around. So, I hate making excuses. It's a red day, part of it. You get the chop, you get the non-continuation moves. And when you're a momentum day trader, it's hard. If there's no momentum, if the market's not really moving in that certain direction and vice versa, it's a bit of a gamble. And today we paid the price. Normally, my profitable days, if you look at my breakdown. So if you look here if you look here at this account, we've had 3 winning days, and my worst day was 2,000. So the worst day yesterday was $2,000. My best day was $6,000. My average winning day is $4,500. You can see the account growth there. So we have been growing the account. This is back Friday, Monday, Tuesday, and then this is Friday, Monday, Tuesday, and then Wednesday we'll be dipping down here and giving back that $3,000. So it's just part of it. I've been thinking a lot about it. I've been putting it out there, kind of talking about how I have this big plan of getting to the top of the leaderboard, how I want to make all this money. And I got a little excited today. Definitely took some trades that I shouldn't have taken. Probably should have just stayed out of it. I was up like $500 on those accounts, and then I should have just been like, okay, hey, it's FOMC day. It's volatile, and we just got to kind of stick to the plan. But instead, got a little cocky trading the combines, making the money, and then I was like, well, let me jump back in, see if I can make some money on the actual funded accounts, and walking away with that $3,000 loss. So $3,000 loss across 3 accounts. That's $9,000. Take away another $1,000. It's not too pretty. On the week, we were up $42,000. You take away today's red day, we're still very much in line to get to that point where we can get the payouts, keep building the account. We took 1 red day. We've had 3 green days in a row, averaging $4,500 over a 3-day period. And then today, we just kind of got chopped up. And it was funny. It wasn't even bad trades. It was just the fact that it's kind of playing too tight of a stop, too large of a size into this volatility. And that's a good lesson, when the market's really volatile, when you're getting these 50-point, 60-point moves in a 2-minute candle, you really got to be aware of that. Like this candle right here opens up, 700s, drops all the way down there to the 600s. That's 100 points in 2 minutes. So you really got to be aware of that. Yes, if you time it right, you get in at the right time, you get out at the right time, it's profitable. But then the problem is when you get in and you don't time it right, when the market shifts and it dips and whatever, it's a battle. But today, walking away in the red. So on the week, we're still up over $30,000 on the week. Obviously, the big goal here is managing the risk, controlling the risk, and knowing that, hey, my good days, I'm walking away with $3,000, $6,000. My bad days, yes, it's a $3,000 loser on a bad day, but hey, we're on that path. We're moving towards that path. This express funded account was brand new. I opened it yesterday, got it up to like, I think $1,200, and then I was up like almost $2,000 on it, and then just kind of got chopped up and took the loss. So it's funny to see like the combine accounts in the green, and then to see the funded accounts in the red. You're like, well, could it be the opposite? Could we do opposite? Could it be opposite? Hey, could you put me on the opposite? Do it on the opposite? I don't know. I can sit here all day, make excuses and all that, and be like, oh, it's the market's fault, blah, blah, blah. But at the end of the day, I pressed the buttons. I took the risk. I took the reward. And today, it's a red day. FOMC, probably a lot of traders are going to be red today. The market was it was all over the place. Definitely some good fake outs, some good breakdowns, and just needed to stick to the plan. I said I was going to look for a long above 19,800 pivot point, like only once we got up there, but instead just kind of let myself break rules, and I paid the price. So we'll be back tomorrow morning to do it all over again, and hopefully, obviously, not give back the profits, right? We're not trying to give back the profits. We're trying to get more profits. We just got to get that $3,000, $4,000 day tomorrow, and then we're back in the green. And then Friday, we hit that one more green day, and that's like a $20,000 payout. So let's get that $20,000 payout. If you guys haven't already liked and subscribed and all that fun stuff, make sure you check out live right here at 9 a.m. We'll be doing it. Talk to you guys later on.